Welcome back to the show, where we explore the hidden psychology behind money, investing, and the decisions that quietly shape our financial future. Today, we're joined by a behavioral finance expert who studies why intelligent people often make irrational investing decisions. Here's my question. Millions of investors say they're just waiting for the perfect dip before they invest. Why does our brain keep convincing us that the perfect moment is always just around the corner?
That's one of the most expensive lies our minds ever tell us, and it feels completely logical while we're believing it. Imagine you're standing on a beach waiting for the perfect wave to dive in. Every wave looks either too small or too dangerous, so you wait. Minutes become hours. Eventually, you realize you've spent the entire day watching the ocean instead of enjoying it. That's exactly how many people approach investing. Our brains are wired to avoid regret more than to pursue gains. Behavioral finance calls this loss aversion. Psychologically, the pain of buying today and seeing prices fall tomorrow feels much stronger than the joy of buying before prices rise. So we wait, believing that patience will protect us. Ironically, it often traps us. The market has a funny way of punishing certainty seekers. By the time everyone agrees it's the perfect tip, prices have usually begun recovering. We want certainty in a world that simply doesn't offer it. There's another bias at work, hindsight bias. After a market crash, the bottom looks obvious. We tell ourselves, I should have bought there. But in real time, it never feels obvious. Headlines predict more losses, social media spreads fear, and even experienced investors question themselves. Warren Buffett famously said, "Be fearful when others are greedy and greedy when others are fearful." Simple advice, but emotionally difficult because our brains evolved to follow the crowd, not challenge it. Waiting also triggers a hidden cost that many investors never calculate: opportunity cost. While you're waiting for a perfect entry, time, the greatest wealth building asset, is quietly moving on without you. Compounding doesn't care about perfect timing, it rewards consistent participation. I've met people who waited years for a crash that never came. Others watched markets double while their cash sat comfortably in the bank, earning almost nothing. Their biggest loss wasn't about investment, it was never investing at all. The truth is, successful investing isn't about predicting tomorrow, it's about managing yourself today. The greatest investors don't eliminate emotion, they build systems that prevent emotion from making their decisions. Regular investing, discipline, and long-term thinking almost always outperform the endless search for perfection. Because here's the paradox: the perfect dip rarely changes your future, but consistently showing up does.
That's such a powerful reminder. Sometimes the biggest risk isn't buying too early, it's waiting forever. If today's conversation challenged the way you think about investing, subscribe for more insights into the psychology behind wealth, decision making, and long term success. And here's something to think about before our next episode. What if your greatest investment obstacle has never been the market, but your own mind? Until next time, invest wisely and stay curious.